Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 31st, last day of the week, last day of the month, and last day of the quarter. And oh boy, we are reaping. Welcome to the new bull market. Personal income 0.3, slightly higher than expected, but lower than before. Personal spending lower than expected, and PCE month over month way lower than the previous one, and core PCE, that's the key, 0.3 instead of the 0.4 that was expected, and lower than the 0.5 that was the previous one. Year over year, 5%, previous 5.3 for PCE, and core PCE 4.6, slightly lower than the 4.7 that was expected, and also the previous one. Chicago PMI a little bit higher than expected, but consumer sentiment it's showing lower than expected. Inflation expectations way lower than expected, consumer expectations way lower than expected, and 5-year inflation flat. So what is the outcome of all this? Well, I think this personal spending and income are showing that obviously the people has less money and are willing to spend less. And PCE are showing that prices are going down. And the most important thing to understand is that this is not CPI. This is PCE, that is the indicator that Feds want to review. This is the preferred measure for inflation for the Feds. And this is super important because this is going to show you, most probably, and markets are telling that this is going to most probably make that the Fed is not willing to raise aggressively the next time. And I say aggressively because basically we are still pricing in 50% of 25 basis points. But the thing is that this is already priced in the markets. This is already priced in. And most probably after this is going to be the last interest rate hike that markets are willing to see and are betting Fed are going to do. This is the overall sentiment for the day. This is not just a trap, manipulation, a trick. This is just fundamental background and reasoning regarding the fact that most probably we have already seen the bottom, and from now on, Fed are going to pause, are going to pivot, and are going to hold at that 5% interest rates for months. For how many months? Well, this is another topic that bonds market, we are going to review the Nasdaq, but hold on a little bit. Markets are pricing in for September 4.78. So that's the first thing that you are, I think, we have to think about this. I don't agree that Fed are going to cut immediately after May. I think Fed are going to at least be at the terminal rate of 5%, 5 to 5.25, at least 6 months. So from May, that's month 5, from May plus 6, I think on September, we are not going to see any interest rate cut. Most probably, we are going to see the first cut in December. And this is based on the fact that banks are already sound and resilient, the same that Treasury Secretary Yellen and Powell are defending. Bank sector, bank issues are solved, or we are working for solving that. But this is not anymore regarding interest rate hikes. It's all about, will the economy hold? Will US economy be able to hold these interest rates at 5% for months? Because I think Fed are not willing to do any kind of betting against inflation. They don't want to do any mistake. They are going to be at 5% for months. They are not willing to take any risk. So until CPI inflation goes below that 5%, we are going to be at that level for sure. That's the strategy, and this is the proper way of killing inflation. Next, we have another issue. That's the kind of landing that we are going or we are betting to do. For now, markets are betting that we are going to see a soft landing. Soft landing means that economy is strong. We are going to see pullbacks, but those are most probably be met by demand at specific levels, key levels that we will be discussing in this channel. But markets are not betting on a recession. Markets already saw strong labor market, strong sectors on the economy, and we are almost at the terminal rate. So this is just time for adjust expectations for the terminal rate and be patient until earnings, key moment, earnings in the coming weeks, starting with banks, earnings in Q1 and Q2 are going to be most probably bad. And when I say bad, I mean that's obviously that we are not going to see the growth and the value that we saw in the past. But the most important thing is that after these earnings and starting to the last quarters of the year, we are going to see the pivot of the Fed, and most probably market will buy that dip. Most probably, at least that's my sentiment. I think markets are doing an unbelievable job since these March lows, and we are breaking these really important levels, 13,000, and going beyond that. And most probably, at least for now, Nasdaq is going to end look at the weekly. This is super strong. And the monthly, oh boy, the monthly did destroy a lot of shorts. This is squeeze. Look at this candle. This is super bearish. I think a lot of people got squeezed after that. So that's the thing. Look at this market. This is beautiful. Super strong, holding the EMA and just being technical. Obviously, there were a lot of shorts, a lot of bears trying to short the market, and that fueled the push. But what is true is that at a technical level, this was from higher time frames, 30-minute chart and beyond, this was beautiful. On the other hand, for the daily trading, this price action was super bad. Believe me when I say that I got chopped out a lot of times trying to short and trying to go long. These moves were unbelievable. There were a lot of money in the markets betting to do exactly this. And when I say exactly this is that, oh boy, big funds are taking profits for sure at these levels. This was a 10% move on the Nasdaq. Brutal. Fueled by whatever, short squeeze or whatever you may call it. But what is true is that this market is super strong and it's eating shorts for breakfast. Apple, 1%. Microsoft, 1%. Tesla, look at this, 5.15%. Amazon, 1%. Google, 1.40%. Nvidia, 1.33%. And the dollar is holding. The dollar is the key to really understand what kind of economy are going to see in the coming weeks. Are we going to see... This is a fib retracement, by the way. This was just the proper pullback, the proper area to see the dollar recovering. So dollar is the measure for the recession. If dollar holds value, I think we are going to see higher value in the future and most probably a no recession path. If dollar starts weakening and economy starts showing signs of weakness, then that soft landing might be an issue. But for now, dollar is in the green, 2-year yield, 10-year yield, the inverted yield curve. It's one of the most important things that we need to watch right now, that most probably we are starting to see the pivot on the Fed and starting to see signs of cooling down on the inflation. And this is going to be key to understand if we are going to recover for a soft landing or we are going to see sickness on the economy. So watch the inverted yield curve and also the 2-year and the 10-year yield. And last, well, all banks, MCB, so a really big dead cat bounce, I would say. But look at this. Let's check finally the sector funds for traces, for details regarding the kind of rotation, if there's any, for Wall Street. So a lot of times in this channel, we are reviewing the sector funds performance to see if there's any rotation. And look at this, energy. This in the mid long term is going to be an issue, but right now, what kind of sectors do we see at the top? Consumer discretionary, financials, and technology. Defensive sectors are at the bottom: healthcare, communications, staples, and utilities. You want to see this rotation into growth and into consumer discretionary away from the defensive sectors. So this kind of move today, if we check the 1 day, consumer discretionary is just fueled by Amazon and Tesla, because consumer discretionary is already smelling the lower interest rates, and that most probably will fuel and support the economy. We are not going to see a lot of spending, a lot of income, but we need people to at least consume and have money and not to be destroyed on their economy. So now that we are starting to kill the inflation, we need to support the economy by holding the spending, holding the businesses, and at the same time continue seeing weakness on the inflation. This is super tricky, and this is not something that we are going to see in the upcoming months. This will take years, but at least we are seeing that utilities, staples, healthcare, all these defensive sectors are at the bottom. So we are seeing healthy value. And let's go back finally to the Nasdaq. Well, still really strong. We are consolidating up here. This is an unbelievable move. So don't get me wrong, this was from the open. This is just 1.5%. We were a little bit flat during the overnight. I think people were skeptical. People were doubting regarding the PCE, but once we saw the number, we saw a little bit pullback. Look, the volume on this pullback, low volume. And then once we saw the 30-minute chart showing the way on the break of the pre-market highs, I think we just skyrocketed. So congratulations, bulls. I think we did a very nice job. If you had the patience to really trade this price action, I think the technical moves were quite nice. So enjoy your weekend, take your profits, and let's see the pullbacks, because we are going to see pullbacks. We need to check these levels, and we need to check the 200. These are the two main levels that I'm willing to see and willing to see hold. I don't want the Nasdaq to just trade below the 200 or below this key March bottoming tail. But this will take weeks, so just be patient, enjoy your gains. If you were long, if you were short, Just learn your lessons, do your homework, and be prepared for the next opportunities to the downside. They will be for sure. But for now, enjoy your weekend, and let's see what kind of markets do we have ahead for next week. So thank you for your time as always. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Please support the channel. Stay with me. We are going to continue analyzing the market because now it's getting really, really interesting. So be disciplined, be patient, and remember that risk management is key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.